Are you constantly bombarded with advice on where to invest your hard-earned money, stocks, real estate, or the volatile world of crypto? Do you feel paralyzed by choice, unsure which path is truly smarter for building wealth? Most people pick an investment based on hype, fear, or a friend's recommendation, often without truly understanding the unique characteristics, risks, and benefits of each. This leads to costly mistakes and missed opportunities. In this video, I'm going to break down stocks, real estate, and cryptocurrency, comparing their potential risks, and what makes one a smarter choice for different types of investors. Get ready, because the smarter choice isn't the same for everyone, and understanding why will be your biggest takeaway. Before we dissect these investment giants, please take a quick second to hit that like button, subscribe to Finance Butler for more clear, unbiased financial analysis, and share this video with anyone who's trying to decide where to invest. And as always, I'd love to hear your thoughts, so drop a comment below and tell me, which asset class are you most drawn to right now? 10. Understanding what each asset is. Before comparing, it's crucial to grasp the fundamental nature of each. Stocks represent ownership in a company, giving you a claim on its earnings and assets. Real estate is tangible property, land and buildings, which you can own directly or indirectly. Cryptocurrency is a decentralized digital asset, primarily relying on blockchain technology, often designed as a medium of exchange or a store of value. Most people only see the price fluctuations, not the underlying asset. Understanding what you're actually buying is paramount. Each has a different intrinsic value or utility. You need to know if you're buying a piece of a business, a physical asset, or a digital token. Do you truly understand what backs the value of a stock, a piece of real estate, or a cryptocurrency? 9. Liquidity. How quickly can you get your cash out? Imagine needing cash quickly in an emergency. Stocks are highly liquid. You can sell them and typically have cash in a few business days. Real estate is notoriously illiquid. Selling a property can take weeks or months, involving extensive paperwork and fees. Cryptocurrency is generally very liquid, tradable 24/7 on exchanges, but its value can fluctuate wildly during that process. Liquidity refers to how easily and quickly an asset can be converted to cash without significantly affecting its market price. This is crucial for emergency funds or short-term goals. If you might need your money soon, liquidity becomes a primary concern. How important is being able to access your investment money quickly if an emergency arises? 8. Volatility. How much do prices swing? Volatility is the degree of variation of a trading price series over time. Cryptocurrency is by far the most volatile, with daily swings of 10 to 20% being common. Stocks, while volatile, are less so than crypto, especially if you're invested in broad market index funds. Real estate is generally the least volatile, moving much slower, though local markets can have significant booms and busts. High volatility means potential for huge gains, but also for massive losses. Your emotional tolerance for these swings is critical. Understanding volatility helps you match your investment to your risk appetite. How comfortable are you seeing your investment's value drop significantly in a short period? 7. Historical returns. What has performed best over time? Looking at long-term historical data provides crucial context. Over many decades, stocks have historically offered the highest average annual returns, often around 10 to 12%. Real estate has also shown strong returns, often comparable to stocks, especially when accounting for leverage and rental income, averaging around 8 to 10%. Cryptocurrency has had explosive growth in certain periods, but lacks long-term historical data and has experienced extreme boom and bust cycles. While past performance doesn't guarantee future results, historical data is a strong indicator of an asset's long-term potential. Consistent, diversified stock market investing has been a powerful wealth builder. Focus on long-term trends, not just recent spikes. Are you investing for the long haul, seeking consistent historical performance, or chasing recent high-flying gains? 6. Income potential. Do they pay you back? Can your investment put money in your pocket before you sell it? Stocks can pay dividends, providing regular passive income. Real estate can generate consistent rental income. Cryptocurrency, generally, does not pay intrinsic income, though some newer assets offer staking rewards or interest in DeFi protocols, which come with their own risks. Income potential is crucial for passive income streams, or if you plan to live off your investments in retirement. It's money working for you without selling the asset itself. Consider whether you need a cash flow generating asset or purely an appreciation play. Do you want your investments to pay you income regularly, or are you focused purely on growth when you sell? 5. Tangibility and intrinsic value. Real estate is a tangible asset. You can see it, touch it, and often derive direct utility from it. Stocks have intrinsic value derived from the underlying company's earnings, assets, and future potential. Cryptocurrency's value is primarily derived from network adoption, supply, demand, and often speculation, without a traditional underlying physical asset or earnings stream. Tangibility can provide a sense of security for some investors. What truly gives an asset value is an important consideration for long-term holders. Understand what fundamentally drives the value of your chosen investment. How important is it to you that your investment is a physical asset or backed by a tangible business? 4. Barriers to entry and accessibility. How easy is it to get started? Stocks are highly accessible, with many platforms allowing investments for as little as $1 and low fees. Real estate typically requires significant upfront capital and can involve managing tenants or property. Cryptocurrency is also highly accessible with minimal investment amounts, but requires understanding digital wallets and exchange platforms. Consider your starting capital and your comfort level with different operational complexities. Accessibility impacts who can get started today. The easiest might be the one you can start consistently with. What's your current financial situation, and which asset class fits your immediate accessibility? 3. Management and effort required once invested. How much ongoing work is involved? Stocks are largely hands-off after initial purchase. Real estate can be very hands-on, though you can outsource to property managers for a fee. Cryptocurrency requires active monitoring due to its volatility, and understanding security best practices. Your preferred level of involvement should guide your choice. Do you want truly passive income, or are you willing to put in work for potentially higher returns? Consider how much time and effort you're willing to dedicate. How much ongoing management are you willing to put into your investments? 2. Regulatory landscape and protection. How regulated is the market, and what protections exist for investors? Stocks are highly regulated in the U.S., offering investor protections and transparency. Real estate is regulated at local, state, and federal levels with established legal frameworks. Cryptocurrency is still largely unregulated, with evolving rules that can create significant uncertainty and less investor recourse in cases of fraud or exchange failures. Regulation aims to protect investors, though it doesn't eliminate all risk. The absence of clear regulation in crypto adds an extra layer of risk. Understanding the regulatory environment gives you insight into potential risks. How important is a regulated investment environment and established investor protection for you? 1. The smarter choice. It depends on you. Here's the most crucial takeaway. There isn't one smarter choice that fits everyone. The smartest investment depends entirely on your individual financial goals, your risk tolerance, your time horizon, and your willingness to learn and manage. For consistent, diversified long-term growth with high liquidity and low effort, stocks are often the smartest choice for most beginners. For tangible assets, leverage potential, and consistent cash flow, real estate can be smarter for those with higher capital and a willingness for more active management. For high risk, high reward potential, and a belief in decentralized technology, cryptocurrency might be smarter for a small speculative portion of a well-diversified portfolio, but not as a primary wealth-building tool for most. The truly smart investor understands all three and builds a diversified portfolio that aligns with their unique situation. Which investment asset aligns best with your personal financial goals and comfort level after hearing all this? Choosing the right investment path isn't about following the crowd. It's about making an informed decision that aligns with your personal financial blueprint. If you only caught the end of this video, you missed crucial insights into the unique characteristics of stocks, real estate, and crypto, and why the smarter choice truly depends on your individual goals and risk appetite. Go back and watch from the beginning to make your most informed decision. If you're ready to start building a diversified portfolio that truly fits you, check out my next video, linked right here, where I share how to build a balanced investment portfolio combining these assets to maximize growth and manage risk. Don't forget to like this video, share it with anyone who's navigating these tough investment choices, and subscribe to Finance Butler for more practical wisdom that empowers your financial journey. And tell me in the comments, based on what you've learned, what's your smarter choice for your next investment? Let's invest wisely.